History of gold prices. Gold historical returns. You're about to dive into the fascinating history of gold's returns from 1971 to the present, May of 2025. Gold has performed well against other commodities in terms of historic returns even in the face of rate hikes and other economic headwinds. In this video we will discuss gold's price history, factors that influence its price, gold's historical returns, the present outlook and more. It is worth mentioning, gold tracks the strength of the US dollar and present inflation trends. If you think that your savings are not keeping up with the cost of living, see the link in the video description to access the free inflation retirement calculator to make sure you are on track. Gold price history. If you're looking to delve into the economic history of gold, it's crucial to first understand how the price of gold has fluctuated over the years. Gold prices have been shaped by many factors such as supply and demand dynamics, geopolitical events, and changes in the currency markets. To get a comprehensive view, it's essential to consider both the long-term trends and shorter periods of volatility. Historical gold prices can be traced back hundreds of years, providing a rich data set for your analysis. For example, the British official price data spans from 1257 to 1945, while the US official price data covers 1786 to 2001. In these records, you'll notice periods of relative stability along with episodes of rapid price changes. This volatility is a key characteristic of gold, reflecting its sensitivity to global economic and political shifts. To dive deeper, you can analyze the gold-silver price ratio, which offers insights into the relative value of these two precious metals over time. This ratio can be a useful indicator of broader market trends and investor sentiment. Moreover, looking at the New York and London market prices allows you to compare gold prices in different financial hubs. Notably, gold is typically denominated in US dollars, so changes in the dollar's value can significantly affect gold's price in other currencies. In your analysis, it's important to consider different time frames. Whether you're planning to swing trade or invest long-term, understanding these historical trends can guide your strategy, as gold's price patterns often repeat over time. The factors that influence prices and gold returns. When examining gold's historical returns, it's critical to understand the factors that influence gold prices. These include demand dynamics, the inverse relationship between gold and fiat currencies, gold's role as a safe haven asset, the supply of available gold. Each plays a significant role in shaping the investment landscape of this precious metal. Gold demand. Often you'll find that the demand for gold and its subsequent returns are significantly influenced by various factors, including geopolitical events, economic stability, and market sentiment. For instance, during periods of political unrest or economic instability, investors often turn to gold as a safe haven asset, driving up demand and prices. Conversely, in times of economic prosperity, demand for gold may fall as investors shift towards riskier assets. Furthermore, market sentiment plays a crucial role in gold demand. If investors are bullish about the future, they might reduce their gold holdings, pushing prices down. Conversely, bearish sentiments lead to increased gold purchases, driving prices up. Therefore, understanding these factors can help you predict gold's future demand and potential returns. Gold and fiat currencies. An inverse relation. As you delve deeper into the world of gold investments, it's essential to understand the inverse relationship between gold and fiat currencies, which heavily influences gold prices and returns. Today, most nations use fiat currencies, unpegged from gold, causing their value to fluctuate based on economic factors and government trust. This fluctuation creates a seesaw effect with gold prices. As fiat currency value drops, gold value rises and vice versa. Particularly, the US dollar has a significant impact on gold prices. If the dollar strengthens against other currencies, gold prices usually fall, as its relative cost increases for non-US investors, reducing demand. However, recent trends show gold and the dollar rising together due to macroeconomic factors like global debt levels and the China-US trade war. Gold as a safe haven asset. Understanding how gold acts as a safe haven asset and the factors that influence its prices and returns can help you make more informed investment decisions. Gold's value remains steady amidst economic volatility, providing a hedge against rising costs of living. Central banks often hold gold reserves as a safeguard during financial instability. For example, central banks, more specifically among the Eastern BRICS nations, have been mass accumulating gold as a reserve for the last 5 years, creating a secure price floor for this asset. Furthermore, during 2020, gold prices hit an all-time high due to investor concerns about the COVID-19 pandemic. Geopolitical conflicts such as the Russian-Ukraine war and the most recent Israeli-Hamas conflict have also spurred an increase in the gold price. It's crucial to consider these factors to maximize your gold returns. Supply of available gold. You might be wondering, how does the supply of available gold influence its prices and returns? It's a matter of supply and demand. Each year, we add around 2.5 to 3 million kilograms of gold from mining to the overall stock. However, this supply typically falls short of global demands. Miners finding less gold than anticipated can unexpectedly reduce supply, driving prices up. Only an estimated 20% of gold remains to be mined, which could impact future availability and prices. Technological advancements in mining could increase extraction at previously uneconomical sites, potentially influencing gold returns. Historical returns of gold. As we shift focus to the historical returns of gold, consider that from 1972 to 2022, gold's long-term nominal annualized return was 7.78%. This period is significant as it follows the end of the gold standard, a time when gold prices in US dollars were no longer arbitrary. Gold's 7.78% annualized return is a long-term average, meaning returns can diverge drastically over shorter spans. For example, during certain years, gold's annual return soared as high as 58.44%. Analyzing these figures can help you understand gold's volatility and potential for both high returns and possible losses. It's crucial to consider this when planning your investment strategy. Here's a more detailed look at gold's historical returns. Long-term, 1971 to 2019, average annual returns of 10.6%. Last 5 years, average annual returns of 13.1%. Last 10 years, average annual returns of 10.7%. Last 20 years, average annual returns of 11.4%. Annual returns in specific years. 2023 saw an average annual return of 13.8%, while 2024 saw over 28%. Present returns as of May 2025, gold has seen an average return of 15.53% so far, which is quite impressive. Given the present bullish outlook for gold, the yellow metal is expected to see a continued strong performance. See our video on the gold price forecast for the next 5 years. Link in the upper right. Finding a trusted gold investment company that actively monitors economic trends and policies that can directly affect the gold price is critical. Professional gold investment companies can help determine buying entry points as well. In addition to investment timing, a gold IRA company, more specifically, can provide a means of owning physical gold without the need or possible liability of storing it in your own home, as well as yielding potential tax benefits and competitive prices. Finding the right gold IRA company for your individual needs is critical. For example, if you require a low investment minimum to start a gold IRA, Birch Gold Group or American Hartford Gold would be 2 choices to consider. However, if you are a serious high net worth investor who can afford a higher minimum to take advantage of the most competitive gold prices and lifetime customer support, then Augusta Precious Metals would be a good fit. For a highly personalized experience, National Gold Group is a family-owned gold IRA company that offers a low minimum investment, no-fee buyback policy, and great educational resources for their clients. Furthermore, Noble Gold Investments provides gold IRA as well as private investment options for home storage. See the links in the video description to access the free gold IRA guide from the gold IRA company that best serves your needs. I just want to take a moment to thank you for supporting our channel. Please like and subscribe if you enjoy this video content. It really does make a difference. Now back to the video. Why look at historical gold prices? By examining historical gold prices, you're potentially able to identify trends and price support levels, which might assist in making informed buying or selling decisions. Analyzing historical gold prices can be useful in identifying potential areas of price support. For example, if gold has pulled back to the range of $3,200 per ounce multiple times, but each time is met with strong buying interest, then the $3,200 area may be considered a level of support, potentially a good area to buy. Furthermore, viewing historical gold prices in various currencies such as British pounds, euros, or Swiss francs can offer different perspectives. An inflation-adjusted gold price chart using the 1980 CPI formula can further enhance your analysis. One of the best online resources is John Williams' Trueflation site, which tracks inflation with this more realistic, accurate formula. This analytical approach isn't just about studying past prices. It's about understanding the larger trends and making data-driven decisions. For easy reference, consider using a table that shows gold's price change and percentage change over different time frames, like a single day, 30 days, 6 months, 1 year, 5 years, or 16 years. In essence, historical gold prices expose valuable insights that can guide your future gold investment decisions. It's clear that gold has held its own against other commodities, but it's not immune to market fluctuations. US rate hikes, global gold holdings, and tax implications further complicate the picture. Still, as part of a diversified portfolio, gold remains a robust option. Remember, understanding the past is key to navigating future investments. If you have $100K in retirement savings to protect and are looking to take advantage of the most competitive gold prices, see the link in the video description to attend a free gold investment educational webinar hosted by Augusta Precious Metals. Secure your place today. Thanks for watching.